Welcome back, learners. So this is Manisha, and in today's video, we are going to solve one more long question, and the question name is your MALRIGHT. So it's from the BP exam kit. As I said, one of my viewer has requested that she is struggling to solve these long questions. So for her, I am making this video. We will complete this full question in the today video. So please stay tuned. Watch this video till end. And one more thing I would like to say, as you know, Kaplan and BP are no more approved content. So ACC has launched their own study hub. So you can use Kaplan and the BP to practice your extra question like point of view. But please make sure to use a study hub as well during your preparation phase. Okay. So let's solve this question in the today video. So question is saying you are presented with the following trial balance of MALRIGHT, a limited liability company as at 31st October 20x7. So this is for the company one, not the sole trader. And one more thing, if you will look at this trial balance, you will not find any closing inventory. Instead of that, you will find the opening inventory. So please don't panic if you don't get any closing inventory figure in the trial balance. You will not find. And if you require to perform calculation using the closing inventory value figure, so in exam they will mention somewhere in the notes or provide in the question itself that the closing inventory value is this much. Okay, so don't panic if you don't get the closing inventory in the trial balance. Okay, so you will not find this in the trial balance. Okay. So now first requirement is do each of the following item below the statement of financial position as at 31st October 20x7. So this item listed below will belong to the SOFP. So I must say you guys are familiar till date that in SOFP we include assets, that your current asset, non-current asset, and liability, again current liability and non-current liability, and the equity portion like your share capital, share premium, retained earning, revaluation surplus, and those things. Okay, and your income expense will be shown in the profit or loss, right? So question is asking about building at cost. So this will be available on your SOFP because it's the assets, and building accumulated depreciation 1st November 20x6. So it will not appear in the SOFP. Okay, so plant at cost, again it will appear in the SOFP. It's your assets, non-current assets, and regarding the accumulated depreciation you will not find in the SOFP. Okay, so bank balance, again bank balance is your current asset, so you will find in the SOFP. Regarding the revenue is your income, so you will find this in the P&L, not in the SOFP. Okay, purchase, again it's in the P&L because it's the expense. Okay, inventory at 1st November 20x6. This is opening inventory. You will not find the SOFP. In SOFP, you will find the closing inventory. Okay, so if they have mentioned inventory at 31st October 20x7, then that will be appear in the SOFP. But it's the opening inventory. You can see the year in date. I have also mentioned in the previous video regarding this kind of question solving, please make sure to check the year in date. It's very important to check the year in date. Okay, and accordingly try to find out the opening year in date. So opening will be the 1st November 20x. That's why it's the opening one. It will not appear in the SOFP. Regarding the cash, again it's a current asset. It will appear in the SOFP. Trade payable, it's a current liabilities. It will appear in the SOFP. Trade receivable, again it's a current asset. It will appear in the SOFP. Administrative expense itself is the expense, so it will appear in the P&L, not in the SOFP. Allowance for receivable, yes, allowance for receivable will be appear in the SOFP, but again here they are talking about the opening allowance for receivable, so it will not be appear in the SOFP. Okay, so again retained earning is also opening one, so it will not appear in the SOFP. Only closing retained earning will appear in the SOFP. ordinary share capital, it will appear, it's a share capital, so it will appear in the SOP in the equity section, and share premium account, again it will appear in the equity section. So these are the figures which will appear in the SOP. And so simple trick is that income expense will be go towards the P&L, and ALE, that's the asset, liability and equity, will be appear in the SOP. Okay, and ending opening balance will not appear in the SOP. Instead of that, closing balance will be available. Now, second number, the allowance for receivable is to be increased to 5% of the trade receivable. The allowance for receivable is treated as an administrative expense. Okay. Okay. So, tax 1. The year-end journal for allowance for receivable is given below. Prepare the double entry by selecting the correct option for each row. See, they're asking regarding the allowance for receivable journal to pass. And before that, please make sure in which accounting head those expenses are recorded. As it here it has mentioned that allowance for receivable are recorded, treated as an administrative expense. So we need to hit those account. But sometimes they might also say that it is recorded in the cost of sales. It is recorded in the other accounting head. So just make sure in which accounting head they are asking or they are treating those expense. So in an exam, obviously, student blindly assume that this kind of expense will go in the administrative expense. So they blindly perform their calculation, pass their journal entry, which is incorrect. So please make sure to check at least in which accounting head they are including those kind of expenses. So in our case, they are included in the administrative expense. So that means allowance for receivable in which accounting? Okay, so P&L they are talking about. They are included. Okay, so allowance for receivable is treated as administrative expense. Fine. So the year-end journal for allowance for receivable is given below. Prepare the double entry by selecting the correct option for each row. So do you think trade receivable will be hit by this allowance? No, we didn't hit the trade receivable accounts. Right. We are simply making the provision that this amount of receivable we are not going to receive. There is probability, but we have not deducted those amount from the trade receivable. So we are not going to hit the trade receivable account. So it will be neither debit and nor credit. Then administrative expense. Yes, we are making the allowance, increasing the allowance. That means the movement in the allowance will be recorded in the P&L, and question says this allowance are treated as administrative expense. So that means expense is increasing. So increasing expense means we should hit the debit. So debit, administrative expense. Now at the same time, we are increasing our provision as well. So previously we have made the 500, suppose we have made 500 allowance. Now we are going to make the 1000 allowance. So that means provision is also going to be increases, and provision is liability. So provision is liability means increase in liability means we should hit in the credit side. So we need to credit the allowance for receivable. Similarly, for the revenue, we are not going to hit revenue item. So again, neither debit nor credit. Okay. Fine. Next, we have a task 2. Complete the following. The amount included in the statement of profit and loss after allowance is increased to 5% of trade receivable is. That's fine. So it's very easy. So question said by how much allowance will be increased? Allowance for receivable, I think, no? Allowance for receivables is going to be increased by 5% of trade receivables. Okay. So now we need to figure out how much is the trade receivable amount. Okay. So from where we can get this figure? From trial balance. So in trial balance, just look for the, here is the trade receivable figure. Sorry. Here, 320,000. So they are taken the 30 common. Please make sure to check this as well, whether the question has taken the 30 common or not, because they have taken the 30 in the common, right? But answer didn't say to take the 30 in the common. That means you need to write in the full. So this kind of also mistake are repeated by student in the exam. So check whether 30 is taken common in the question or not, or whether answer required to take 30 common in the common or not. Okay. So here the answer didn't say to take the 30 common, but the question has taken the 30 in the common. So it's better to take the full value. So trade residual value is 320, 1, 2, 3. So that means 5% of 320, 1, 2, 3. Okay. So it's 16,000. Okay. But this is your closing balance for this year end, not the amount that will throw in the P&L. Okay. So for what amount will be shown in the P&L? The movement in the allowance for receivable. So do you remember the opening amount of allowance receivables? Yes, it's 10. Okay, so previously it was 10,000. Now we have, this one is the closing and this one is the opening. Okay, so now movement is of 6,000. This movement figure will be shown in the P&L. Okay. So this movement figure will be shown in the P&L and 6,000. Don't write the 6 only. You won't get credit. You will lose your 1.5 marks. So please make sure to check the format here. The question didn't, specified any format. So you need to write the full 6,000. Okay. So this is the movement amount that we will show in the P&L. But if the question have said that the amount included in the statement of financial position, in that case it should be 16,000. Okay. All right. Next question. 20.3. Plant is depreciated at 20% per year using the diminishing balance method, means reducing balance method. And building are depreciated at 5% year on their original cost, means straight line method. Depreciation is treated as cost of sales expense. See, here they said depreciation will be treated in the cost of sales, not in the administrative expense. So if you will show this in the administrative expense, which is totally wrong. So please read the at least the requirement 1 or 2 times to have a clarity like this. Okay. So now they have provided a task 1. The year-end journal for the building and plant and machinery is given below. Using the information above, prepare the double entry by selecting the correct option for each row. So we need to pass the depreciation year-end journal, and now you have to decide which item will be account will be credit, which account will be debit. Okay. So do you think administrative expense will be debit? No. Why? Because they specify that the depreciation is a part of cost of sales, not the administrative expense. So if you will debit the administrative expense, it is totally wrong. You won't get your credit. You will lose full 2 marks. Even though you won't get the partial marks here, you will lose full 2 marks. So that's why it's very important to check to read the requirement. Okay, so depreciation it's not going to be part of the administrative expense, so it will be neither debit nor credit. Regarding the cost of sales, yes, it's a part of the cost of sales, so expense is going to be increased, so we need to debit cost of sales. Regarding the building cost, do you think depreciation will hit the building cost? No, so that's why neither debit nor credit. Similarly for the plant cost. But yes, accumulated depreciation will be increased, and for both of them, and it should be hit the credit portion to reduce the value of the building and the plant. Okay. So now they have asked you to calculate the depreciation charge. So now let's do this. So before depreciation charge, we need to find out what is the cost of building. Building cost. Okay, and from where we can find this figure? From trial balance. So building cost is 740,000. Okay, and the question said to calculate depreciation using the reducing balance method. See, for the building, no. So building is depreciated on the straight line basis method, and which is the 5% of the cost. So similarly, depreciation for this building will be 5% of this cost. It's very easy. 37,000. Now for the plant, we need to find the cost, and the plant cost given is 220,000. Okay, 220,000. But accumulated depreciation for the plant is 110,000. So now why I have taken the accumulated depreciation because question mentioned that the plant is depreciated at 20% per year using the diminishing balance method, right? So diminishing balance method means we need to find the net book value. And how can we get that? By subtracting these two, means cost and the accumulated depreciation. Now we will charge depreciation on this net book value. And what is the depreciation rate? It's a 20%. Okay, and that is 22,000. Right. So this kind of also mistake is repeated in the exam. And one more mistake that a student used to do is, see, in the question they provided the depreciation rate for the plant first, then they go for the building. But if you look at the trial balance, they have given first building one cost, then after the plant cost. So in exam pressure, the student blindly assume that first depreciation rate is for the building, and they perform the calculation on the building, which is incorrect, and you will lose the marks. So that's why reread the question 1 to 2 at least, 1 to 2 times at least, so that you will have a clarity what the things or the question is asking to do, right? Next, we have the last question. Closing inventory of 75,000. Ignoring the depreciation charge calculated earlier, and why they are saying, because they said that depreciation are the part of the cost of sales. So what is the cost of sales for the year? That's fine, very easy. So what is the formula for the cost of sales? Opening inventory plus purchase minus closing inventory. Okay. Okay. So we know the opening inventory where it's given in the trial balance. What is the opening inventory figure? It's 160,000. 160, or you can take the 30 common now and later on multiply it by 100. You can do that as well. So opening inventory is 160 and purchase is 1140. And closing inventory figure is already given in the question, that is the 75. Okay, so this subtract 75 and multiply this answer into 1000, because we have taken the 30 common in the calculation. So this is the closing cost of sales value, that is 1,225,000, right? So in this way you can perform the calculation, and this one is easy mark. I hope you won't lose this. So I hope you have found this question useful, and it was a bit tricky, right? So you have a clarity way to not repeat the mistake. So I have highlighted those part as well. So I hope you have enjoyed now, and in next video we will do Thomson Company question. Thank you so much guys. Have a good day.